$3,200. That was the amount Pradeep took out from a Chase ATM in Fremont, California, on a Tuesday afternoon in January 2026. He was a 61-year-old Indian man, a green card holder since 2011, and a retired engineer. He needed cash for a contractor remodeling his kitchen. The contractor had offered a 15% discount if the bill was paid in cash. Pradeep withdrew $3,200 on Tuesday, then $2,800 on Thursday, then $3,000 on Saturday. In total, $9,000 left his account in 1 week. It came from his own savings. It was lawful, and it was his money. 12 days later, he received a letter from Chase Bank. Subject line, account review, activity hold, reference number S2026-0094. His debit card no longer worked. His automatic mortgage payment failed. His wife could not complete a grocery purchase. 26 days after that first ATM withdrawal, 2 Homeland Security Investigations agents came to his home with a file folder. Inside were 6 months of transaction history, his 2024 tax return, and a printed map showing ATM locations he had used during the previous 90 days. They asked one question: Mr. Patel, are you sending funds to anyone outside the United States? He was not. He was paying a contractor. But automated monitoring does not understand kitchen renovations. It sees patterns. Repeated cash withdrawals below a reporting level, increasing frequency, totals nearing $10,000, and activity that may trigger a suspicious activity review. That report can move from a bank to FinCEN and then become available to government agencies very quickly. Pradeep was cleared after 41 days, but he still paid $4,300 for an immigration attorney. His mortgage company charged a $200 late fee. His credit score fell 38 points. This is why you must understand cash reporting rules. Banks often will not explain them in everyday language. Immigration officers may not warn you in advance, and many online videos discuss them without enough care. Today, I will walk you through 5 hidden risk points inside ordinary cash transactions, 5 ways cash activity can enter federal financial reporting systems, and 5 practical steps to protect yourself starting tonight. Let us begin. In 2026, the United States monitors certain financial activity through multiple systems running at the same time. System 1 is the Currency Transaction Report. Under the Bank Secrecy Act, including 31 United States Code Section 5313, financial institutions generally must file reports with FinCEN, the Financial Crimes Enforcement Network, for cash transactions over $10,000 in a single business day. This filing is routine. A teller does not ask for your permission. The report may include your name, identifying number, address, date of birth, and transaction amount. System 2 is the Suspicious Activity Report under 31 United States Code, Section 53N18, and the related regulation at 31 CFR Section 1020-320. Banks must report transactions involving $5,000 or more when they know, suspect, or have reason to suspect that the activity involves illegal funds, attempts to avoid reporting rules, or lacks an apparent lawful purpose. In some circumstances, suspicious patterns may be reviewed even when individual transactions are smaller. System 3 is the $3,000 Monetary Instrument Record-Keeping Rule. Under 31 CFR, Section 10.10.415, certain cash purchases of money orders, cashier's checks, bank drafts, or traveler's checks between $3,000 and $10,000 require financial institutions to record and verify identifying information, such as name, date of birth, address, social security number, or alien identification number. Those records may be kept for 5 years and can be available to authorized agencies through lawful processes. Now, here is what changed in 2026. On March 7, 2026, FinCEN announced an expanded geographic targeting order covering certain money services businesses in Arizona, California, New Mexico, and Texas. This order lowered the reporting threshold for covered cash transactions from the usual $10,000 level down to $1,000 in designated counties and zip codes near the southwest border. Covered areas included Maricopa County, Arizona, Pima County, Arizona, El Paso County, Texas, Webb County, Texas, San Diego County, California, and specific zip codes including 91910, 92101, 92113, 92117, 92126, 92154, and 92173. If you live in or use covered money services businesses in these areas and handle cash at or above $1,000, reporting may be required automatically. Treasury officials said the purpose was to prevent criminal organizations from abusing the financial system and moving proceeds connected to dangerous narcotics and other illegal activity. But here is the practical problem. A geographic targeting order does not know your personal story. It does not automatically separate a criminal operation from a retired engineer paying for kitchen work. The system collects information broadly. Now let me show you the 5 traps. Trap number 1 is the ATM pattern trap. Banks do not only pay attention to cash transactions above $10,000. Financial institutions use monitoring systems that can flag repeated activity below that level. Bank employees and compliance professionals have explained that large cash withdrawals may be reviewed internally, especially when they repeat or appear patterned. Multiple withdrawals near the same amount, such as $2,900, $2,800, and $3,100, may create an internal alert. If a compliance officer decides the pattern appears suspicious, a suspicious activity report may be filed. Here is the important point. A SAR is not something the bank discusses with you. Under federal law, banks are generally prohibited from telling customers when a SAR has been filed. Employees can face penalties if they improperly disclose it. That means you may not know a report exists. You may only notice account reviews, holds, questions, or documentation requests. Trap number 2 is the structuring trap. Under 31 United States Code Section 5324, it is illegal to structure transactions, meaning to break one larger transaction into smaller transactions for the purpose of avoiding federal reporting requirements. Penalties can be severe, including possible prison time and substantial fines. Here is what many immigrants, small business owners, and cash workers do not realize. The government does not need you to use the word structuring. It looks at intent and behavior. If you withdraw $9,500 on Monday and $9,500 on Tuesday, officials may ask whether you were trying to stay below a reporting line, even if you had a real business reason for needing cash. Publicly reported cases show how serious this can become. One example involved Ken Coran, a Palestinian-American convenience store owner in Greenville, North Carolina, and a former firefighter who built his business over many years. He made repeated deposits and withdrawals below $10,000 from legal store earnings. The IRS seized more than $150,000 from his bank account without initially charging him with a crime. According to accounts of the case, agents came to his store, searched the premises, and presented paperwork related to forfeiture. Ken later said he did not fully understand what he was signing and felt pressured. The Institute for Justice represented him and documented that between 2005 and 2012, the IRS seized hundreds of millions of dollars in structuring-related cases. In many cases, the central allegation was not drug trafficking or violence. It was repeated cash transactions under $10,000. Trap number 3 is the $1,000 border area trap. If you live in or travel through covered geographic targeting order areas, effective from March 7, 2026 through September 7, 2026, certain money services businesses must report covered cash transactions of $1,000 or more. This can include check cashing, money orders, wire transfers, currency exchanges, and similar services. Reports go to FinCEN, and FinCEN information can be accessed by authorized agencies under applicable rules. Covered areas include Maricopa, Arizona, Pima, Arizona, Santa Cruz, Arizona, Yuma, Arizona, Bernalillo, New Mexico, Doña Ana, New Mexico, San Juan, New Mexico, Cameron, Texas, El Paso, Texas, Hidalgo, Texas, Maverick, Texas, Webb, Texas, selected Imperial County, California, zip codes, and selected San Diego County zip codes such as 9190, 92101, 92113, 92117, 92126, 92154, and 92173. If you visit family in El Paso and cash a $1,500 check at a covered check cashing store, that transaction may be reported with your identification. If you purchase a $1,200 money order at a covered business in San Diego zip code 92154, your name, date of birth, and identification information may be recorded and reported. These rules do not apply only to undocumented people. They can apply to citizens, permanent residents, visa holders, and anyone else using covered services. Trap number 4 is the SAR to agency pipeline. This is where financial reporting may become relevant to immigration enforcement. When a SAR is filed, it enters FinCEN's system. Authorized agencies can access certain FinCEN information for investigations and enforcement. Separately, there have been legal fights over IRS and immigration data sharing. In 2025, Treasury and DHS entered into an information sharing arrangement connected to immigration enforcement. Reports stated that ICE requested information on about 1.28 million taxpayers and that the IRS disclosed data for tens of thousands of matched individuals. Federal courts later placed limits on the arrangement, with one court finding the policy likely unlawful and another restricting DHS use of certain data. But the wider lesson is simple. Financial records can travel farther than most people expect. A cash pattern at your bank may lead to a SAR. A SAR may be available to federal investigators. Investigators may compare financial records with tax records, immigration records, travel records, business records, or other databases. That does not mean every cash withdrawal creates an immigration case. It means repeated unexplained cash activity can create questions that you may have to answer quickly. Trap number 5 is the civil forfeiture trap. Under civil asset forfeiture law, the government can sometimes seize property suspected of connection to illegal activity even before a person is convicted of a crime. The case may be filed against the property itself, not the person. You may see case names like United States versus a certain amount of money. The government uses a civil standard, and the owner may need to fight to recover the property. Your cash activity, including repeated transactions below reporting thresholds, can be presented as part of the evidence. Another publicly known case involved Randy Sowers, a Maryland dairy farmer who raised cows and sold bottled milk and handmade ice cream at farmers' markets, where customers often paid in cash. According to reports, a bank teller told his wife that keeping deposits under $10,000 would reduce paperwork. She followed that advice without understanding federal structuring rules. In 2012, the IRS seized nearly $63,000 from their account. Criminal consequences were possible, and the family eventually accepted a settlement because fighting the government was expensive and stressful. A dairy farmer lost a large amount of money because he followed informal advice that did not explain the law. These traps are not imaginary. They are part of real systems. They operate every day, and they do not automatically understand the difference between a criminal scheme and an ordinary family paying for tiles, repairs, payroll, milk feed, groceries, or school expenses. Now let me show you what one poorly documented cash pattern can cost in real dollars. Scenario 1. You withdraw $8,000 from an ATM over 4 days. The bank reviews the activity and may file a SAR if it appears suspicious. Your account may be placed under review. Account holds can last days or weeks, depending on the bank and the facts. During that review, you miss a mortgage payment. Late fee, $200. Credit score drop, possibly 25 to 40 points. You hire an immigration or financial crimes attorney because you receive questions from a government agency. Legal cost, often $4,000 to $8,000 or more. Total cost of one questionable cash pattern, $4,400 to $8,200, plus credit damage and stress. Scenario 2. You live in a covered GTO zone and use a check cashing service. Every covered cash transaction of $1,000 or more may be reported during the order period. If you cash biweekly paychecks of $2,200, that can create many separate records in the FinCEN system. Each record may be ordinary and lawful, but repeated cash service activity creates a larger paper trail. Scenario 3. Civil forfeiture. If the government seizes funds, the cost to fight can be extremely high. Legal fees can reach $15,000 to $25,000 or more. The process can take months. During that time, you may not have access to your own money. Your family may not have access. Bills may go unpaid. Credit may suffer. Now compare that with electronic payment habits. If you use direct deposit, pay contractors by check, bank transfer, or another traceable method, and avoid unnecessary large cash handling, you reduce avoidable reporting and documentation problems. Electronic payments are not invisible, and banks may still review suspicious activity, but CTR rules apply specifically to cash transactions. A documented bank transfer, check, or invoice-backed payment is usually much easier to explain than several unexplained ATM withdrawals. The math is simple. Cash can create questions. Documentation creates answers. Electronic records create a timeline. Here is your 5-step protection plan. Step 1. Eliminate suspicious-looking cash patterns immediately. If you genuinely need cash, do not split transactions for the purpose of avoiding reporting rules. That is the key. Do not withdraw smaller amounts across multiple days just because you heard $10,000 is a reporting threshold. If you need a large amount for a legitimate reason, speak with your bank, document the purpose, and keep records. A single transparent transaction with paperwork is usually easier to explain than several smaller transactions that look planned to stay below a limit. The goal is not to hide. The goal is to be clear. Step 2. Switch to traceable electronic payments whenever possible. Pay contractors with a check, bank transfer, electronic bill pay, or another documented method. These transactions may still be monitored under general compliance rules, but they do not create a currency transaction report merely because of cash, because they are not cash transactions. The $3,000 monetary instrument rule applies to certain cash purchases of money orders, cashier's checks, bank drafts, and traveler's checks. A documented electronic transfer with an invoice is easier to defend than a stack of cash with no receipt. Same money, same legal purpose, very different record trail. Step 3. Know your geography. If you live in or travel through covered areas of Arizona, California, New Mexico, or Texas, understand that certain money services businesses may have a $1,000 reporting threshold during the geographic targeting order period. Avoid using check cashing stores or money service businesses for amounts above $1,000 in covered areas unless you genuinely need to. Use a bank account, direct deposit, payroll deposit, or documented transfer where possible. Open a checking account if you can. Have your employer deposit wages directly. Reduce cash use in GTO zones. Step 4. Keep documentation for every significant transaction. If you withdraw $5,000 to pay a contractor, keep the contractor's invoice, receipt, contract, text messages, business license if available, and photographs of the work. If you buy a used car for $8,000, keep the bill of sale, seller information, title documents, and registration records. If any agency, bank, or investigator questions your activity, you want to explain the lawful purpose quickly, clearly, and calmly. Pradeep in the opening story was cleared because his attorney produced the renovation contract and the contractor's business information. Without documents, the review could have lasted much longer. Step 5. Never sign legal papers under pressure. If federal agents come to your home or business and present documents, especially anything involving forfeiture, consent, waiver, or surrender of property, do not sign until you speak with a lawyer. Say these words: "I want to speak with my attorney before signing any documents." That is enough. Do not argue, do not guess, do not volunteer long explanations. Do not apologize for using your own money. Say, "I want to speak with my attorney before signing any documents." You are not required to give up property without proper legal process. You are not required to answer investigative questions without counsel. The Fifth Amendment protects your right to remain silent. The Fourth Amendment protects against unreasonable searches and seizures. Use your rights calmly. Now, let me explain what happens to a family when these steps are ignored. When Pradeep's account was frozen, his wife could not buy groceries for 11 days. His automatic insurance payment failed. His car was uninsured for 2 weeks before he realized it. His 16-year-old son's college savings account, held jointly, was also frozen during review because it was linked to the same profile. When Ken Karan's store account was seized, he struggled to pay employees. Workers went weeks without normal paychecks. He reportedly borrowed against his home to keep the business alive. At 60 years old, his retirement plans were shaken. Years of long work weeks and savings were threatened by a forfeiture process and cash patterns that raised questions. When Randy Sowers lost access to nearly $63,000, his dairy farm still had to operate. Cows still needed feed. Bills still arrived. Federal reviews do not pause a family business. He used personal savings to keep animals alive while trying to recover his own legal money. The impact is never only on you. It affects your spouse who needs groceries, your children whose accounts may be linked, your employees waiting for paychecks, your elderly parents who depend on monthly support, and your business that must keep running. Every dollar you protect through good records is a dollar available for your family. Every receipt you keep is a shield. Every documented electronic payment you use instead of unnecessary cash is another wall between your home and avoidable legal stress. Let me give you the final summary. 5 numbers. Memorize them tonight. $10,000, the general CTR threshold. Cash transactions over this amount in a single business day are generally reported to the federal government. $5,000, the standard SAR threshold for many bank suspicious activity situations. Suspicious transactions at or above this level may require reporting, and smaller patterns may still be reviewed depending on the facts. $3,000, the monetary instrument record-keeping threshold. Cash purchases of money orders, cashier's checks, bank drafts, or traveler's checks at or above this amount may require identity verification and records. Those records can be retained for years. $1,000, the geographic targeting order threshold for covered money services businesses in designated border area locations during the order period. If you are in those areas, this may be the reporting line. 0, the amount of tolerance you should have for splitting transactions to avoid reporting, signing documents under pressure, or handling large cash payments without receipts. 5 numbers, 5 traps, 5 protections. If this video helped you understand rules that many people never learn until it is too late, hit the like button now. It costs nothing, but it helps this information reach the next Pradeep, the next Ken, the next Randy, and the next family that needs a warning before a bank review, account hold, or legal problem begins. Subscribe to Senior Citizen Info. Turn on the bell notification. Share this video with one person in your family who uses cash often. One share could help someone avoid thousands in legal fees, weeks of frozen accounts, and unnecessary panic. In the next video, I will explain how international travel, bank records, tax records, and immigration status can overlap, and what green card holders should document before leaving the United States for long trips. That video comes out in 3 days. Do not miss it. Until then, protect your records, protect your family, protect your status. I will see you in the next video.